Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours. We saw markets swinging from sideways throughout the day on some inflation prints and also some news from China, real economy data coming out yesterday. Although all in all, equity markets ended the day on largely flat to modestly negative across the board. Focusing on big print from yesterday, a US inflation print which came out yesterday. Headline inflation clearly showed the trend of easing. The January number came in at 6.35% year on year. That slowed from 6.44% in December. But just to highlight, it's way off from its highs, which were nearly 9% back in June. So clear disinflationary trends are taking footing. Core inflation that excludes volatile food and energy prices also softened to 5.5% in January from 5.7% in December. Yesterday, data also confirmed that disinflationary trends are well entrenched, and while some of the lagged effects from housing data is still coming through the inflation print. That was the biggest contribution to the inflation print in January. We expect that to fade out as the year progresses. In fact, in the latest post-FOMC meeting, the Chairman Powell also hinted that when setting rates expectations for the coming meetings, the committee will be clearly focusing on the core services, which exclude the housing, the volatile and the lagged effects of housing, which are still to flush through the system, will be the main tool which will guiding them towards setting the rates in the US. Bringing it back home, we saw this morning UK inflation again showing the similar trends. We saw year-on-year inflation also easing from 10.5% in December to 10.1% in January. But there was a big drop in January number itself from December. We saw a drop of minus 0.6%. Prices dropped in January from December. So clearly the disinflation trends are continuing in the UK as well. We also saw the core inflation, which excluding energy, volatile energy and food prices, coming in below 6% for the first time. So the number for January core inflation came in at 5.8% on a yearly basis. So what is driving UK inflation down? It's clearly the drop in energy prices, which we have been talking to you about over the past couple of months. That has contributed to those disinflationary trends. We also saw some goods disinflation, which is well entrenched in types of goods. Both the consumers and also manufacturers or businesses have to pay. So we have seen a clear trend of disinflation there. We have also saw some of those supply chain constraints being eased over the past few months. That has been clogging the system. The service inflation, which is somewhat a focus of Bank of England, and Bank of England, the Governor Bailey highlighted that this will be another. So service inflation is where Bank of England will be focusing on setting the rates expectation. Good news is that also slowed overall in January. So that came in below expectation and continued to show trends over the past couple of months. So where does this leave Bank of England? Though Bank of England did highlight that 0.5% interest rate they increased in their last meeting in February, was one of the last ones of bumper hikes for this tightening cycle. The expectations are the markets are probably more poised about 25 basis points in March, but odds after today's inflation prints, odds of that 25 basis points have come down, and definitely odds for the May the hike of 25 basis points have clearly eased after this inflation print has come in this morning. We'll see how the market evolves from there. But focusing on today, what else is in the pocket for investors today? Investors will be focusing on the retail sales data coming out of the US later today, which is expected to rebound sharply from the drop we saw in December. We saw auto sales also coming firmer earlier in the month. So expect the January retail sales coming out stronger than expected. But as always, we'll keep you focused, keep you posted on how the data comes and how investors will react to that data print. But for now, we'll leave it there, and thank you very much for watching Money Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.